got some breaking news. Let's bring in our next guest. That's going to be Jenny Horne, markets correspondent here on the network. Jenny, we got GDP coming in a little bit light on the headline, right?
We do. So we see GDP on a quarter-over-quarter advance. The actual figure came in around 2.8% versus the forecast of around 2.9%. Previously was 3%. Personal consumption came in around 3.7%. Well, we saw previously that compares to around 2.8% in core. I mean, continue to see these core PCE prices start to improve here. So this was, I'd say, an interesting read because, of course, I do think there's a lot of right now focus on a lot of these economic data points, especially as we go into the major jobs figure later this week. But yeah, slightly above what we had previously expected. And I will say that the growth rates, well, the actual did come in below expectations and below the prior. Again, I don't see this. I mean, I know that markets will cling on to anything to basically see some down revision, but I don't see this number as perhaps as dire. No negative reactions on Twitter yet, as far as I could see. But yeah, I mean, a miss as far as GDP's overall figure was concerned.
Yeah, core PCE price index 2.2%. That was expected to be 2.1%. Last 2.8%. But personal consumption, Jenny, 3.7% versus about 3.3% expected. So people are still out there spending, right?
Yeah, I mean, if people are still out there spending, that's exactly what I was just seeing. And cooler than expected for the headline, slightly hotter actually for the core headline, which I think is interesting. But it does go to show that the resiliency we continue to see from the spending. And I mean, the GDP growth we've also seen. I think there's the expectation we could start to see some moderation. But I mean, all things considered, price index 1.8 versus 1.9, pass was 2.5%. There's a lot of reads that show this is cooling. So that I think is overall, except for when you break out like personal consumption, for example. Yeah, that's the only figure that seems to be hotter than expected. Previous was 3%. So not only did it beat expectations, it beat the prior number as well.
Yeah, we'll continue to watch that story. Atlanta Fed GDP now yesterday got lowered down to 2.8%. That was above 3.3% just last week. So maybe a little bit of softness, but still pretty robust at this stage. And the jobs number was better than expected out of ADP. But now let's pivot over to some earnings, Jenny, because we got a blowout here for Reddit. I mean, I tell you, I see when I do Google searches, Jenny, the amount of stuff that pops up for Reddit. I don't know if they're paying for more exposure on, maybe some of these search engines, but it's been pretty robust, and this stock is just skyrocketing here to the upside.
No, Tom, I'm glad you say that because I wasn't sure if it was my algorithm. I'm a frequent Reddit user anyway, so I thought that it was maybe catered to me, but no, something is happening with like Alphabet, Reddit. It is basically the second search query you see every single time, which, hey, seems to be boding well for them in this current quarter. We saw shares rise as much as 22% this morning, topping, $100 a share for the first time after the company did report third quarter results that pretty easily topped expectations and issued some optimistic forecasts for the current period. So still losing money, 16 cents a share versus they gained 16 cents a share versus the 7-cent loss expected. So that actually was higher than obviously had been expected. Revenue of around $348 million versus $313 million roughly estimated. That did mark, 68% revenue growth. So really healthy read as far as their top line was concerned. They did say that fourth quarter revenue will fall between 385 and 400 million. That beats the consensus at around 358 million. Also did say that adjusted earnings for the quarter will range between 110 to 125 million. So they did say that their daily active users rose 47% year over year to 97.2 million. Better than estimates at around 96 million, and their average revenue per user was around $3.58. That also beat expectations. So they said they continue to be one of the most visited and trusted sites in the world with opportunities available to them that are not available to more companies. I will say, so since this is a very user-led platform, there is a degree of you have to parse through, I think, misinformation, frankly. But if you ever need to know how to do anything, which happens to me a lot, various household chores, you just go on Reddit and there's a Reddit thread for that. So that's why I use it, because it has taught me so much. It's helped me with all my various projects. So that's where I recommend Reddit every single time.
Yeah, that's the problem that I have using that platform is, somebody, you pose a question and then you get a bunch of yahoos on there throwing out some misinformation. So it's almost like you got to spend more time
to
get what you want on it. But you've got more time, Jenny. I've got no time, and we've got no time on the show. So let's get to the next stock. That's going to be CMG. Chipotle earnings. What'd you see out of the fast casual Mexican restaurant chain?
I know, and long I would say deemed as one of the best performers in the restaurant space, one of the most discretionary but somehow resilient names, has not been the same player since we saw, Brian Niccol leave, frankly. I think that was a bit of a black eye for the company. So continuing to see a mixed quarterly report. Earnings beat expectations, revenue fell short. We saw that overall 27 cents per share on an adjusted basis, 25 cents a share was what was expected. Revenue was just shy of $2.8 billion versus the $2.82 billion estimated. And they did also continue to say their food and beverage costs really increased during the quarter, partially due to their decision to re-emphasize these generous portions after social media really came after Chipotle for skimping on some of their portions, which I had never witnessed, but now that I feel like I'm frequenting Chipotle more and more, I'm like, okay, yeah, maybe you're not getting the same bang for your buck you once did. Net sales, though, were still able to climb 13%. Same-store sales rose 6%, just shy of expectations. And while they said many consumers have opted to eat less, they've benefited from having a wealthier customer base that's willing to pay more for these burritos and bowls. So right now they're saying they're seeing growth from all income cohorts, but led by that more insulated, higher end consumer, which is, I think, the case for, most of these restaurant companies. But right now they said they continue to open locations. They opened 86 locations during the quarter. They're also investing in new equipment to continue to autonomize their assembly line. So I think that there's things to like about this report, but you can see very easily how they slightly missed the mark on a few metrics, and that's why we're seeing a bit of a choppy reaction to these earnings.
Yeah, and if I hear one more time out of Oliver Rennick here from the network and Alex Coffey about this brisket, I'm like,
and Kevin Higgs.
Yes, I'm almost going to say, have you guys actually had really good Texas brisket? Because that's probably not it. But hey, for a fast casual chain, maybe it is good, Jenny.
No, I've had it. It's fine. I'm going to go ahead and be the contrarian and say it's not that good.
I'll take your word for it over theirs. All right, great discussion. Thanks to Jenny Horne, markets correspondent here on the network.